On Tuesday, oil gained value to settle at $84 per barrel. This means that its upside potential still persists and is driven by a shortage. Black gold prices began to edge higher amid falling gas prices in Europe. This raised fears of a crude oil shortage, although OPEC and its allies are sticking with their plan to gradually add more crude to the market. Production volumes are below the established quotas, and this fact, coupled with the Libya supply issues, suggests possible oil shortages. Thus, growing concerns and the lack of a solution to the problem may act as the key drivers for oil growth. Today, Brent crude oil futures continue to rise. As already noted, oil reached $84 per barrel. However, in order for the benchmark to extend gains, the quote needs to consolidate above this level on at least the 4-hour chart. If it succeeds, oil prices will most likely head towards the local high posted on October 25 and the level of $86.68 per barrel. Otherwise, a rebound in prices is possible. The Russian currency keeps moving upwards, albeit very slowly. In fact, this movement can hardly be called growth. Rather, the ruble is gradually appearing early losses, trying to return to the levels seen at the end of last year. The Russian currency is being supported by higher oil prices. According to forecast, the ruble has every chance of approaching the level of 73.5 rubles per dollar. From a technical point of view, the dollar-ruble pair fixed below the significant level of 75 rubles per dollar and then resumed its inertial downward movement. Currently, the pair is gradually heading for the 74.30 mark, while its oversold status has not yet been confirmed. Thus, there are two possible scenarios of the quotes. Further dynamics today. The first scenario suggests a slight 0.5% rise in the ruble, while the second one implies a technical rebound. Speaking of gold, the precious metal advanced considerably yesterday. True, its bullish run seems to be so rapid only against the background of other assets. In fact, gold prices continue to move within the long-established channel, and the level of $1,830 per troy ounce is just its upper boundary. This is not the first time the metal has got close and even overcome this mark. However, it always returned to the lower boundary of the range of $1,790 per troy ounce, and this suggests that its real upside potential is rather limited. Moreover, today's data on inflation in the United States may well drag the asset down. On Tuesday, gold futures managed to break above $1,800 per troy ounce and moved further up to the level of $1,830. If the price consolidates above this resistance level on the daily chart, the precious metal will most likely extend gains. Otherwise, stagnation followed by a rebound is possible. And now, when you are aware of today's trading opportunities and risks, you can safely develop your own strategy. May your trades be profitable, and see you soon!